All right, so let's take a look at today's trade. I'm just going to stick with ES. That's what the trade was taken. So this is the 5-minute chart in bar replay mode. As you can see here, we have Asia and we have London, which is pretty much just consolidation. And this is coming off a crazy bullish move we've seen this week. We haven't seen anything like this since, I don't know, post tariffs really. And it's funny, it was actually April of last year. So yeah, coming into today, what we did see here was accumulation through Asia. We did see manipulation in London. So really at this point, I would either like to see a pullback back into this 5-minute, and then we continue on to higher. Right here are my two draws that I'm looking at. So let's see how it played out and the trade I took. So on New York Open, we saw immediately this target get taken, which I'm okay with. Once this was taken, I marked out this 5-minute fair value gap, and I just wanted to see how price reacted if we came back down here. So we crashed right through this gap and created a bearish BPR. So again, at this point in time, if we actually take a look at that's the wrong chart, one moment. There we go. Yeah, so we saw a pullback here, and we'll see how the price reacts. At this point, I was just chilling. I just wanted to see how price developed from here. And if we actually look over at NQ, we saw it immediately bought back up. We're in a market right now where a lot of people were short on the Iran war and just global uncertainty, and the market's after going against shorts in a major way. We are up 10% plus off the lows with not many pullbacks. Any pullback is bought up by shorts trying to cover their positions. So once I saw the bullish nature of NQ here, and the fact we still had really high quality draws liquidity above, I just said I'll wait to see how price reacts to this fair value gap. Once we got this candle closed, I knew it was my time to enter. I put a limit order. I put a limit order right here. I put my stop here. My target was, I used a fib again because I actually didn't need the full move. So this is my target. Yes, I didn't need the full move as I'm going in with heavy enough size, and I have a consistency rule on the evals I'm trading at the moment. So I don't even need to get full 2 Rs. So I waited to get tagged in. As you can see here, price came back. I'm now in the trade. And so at this point here, I brought my stop to break even. So typically what I do is once I enter my trade, I actually go for a walk, because typically I'm just looking to set it pretty much where my TP1 would be is where my take profit is every time, once it's above a 1 hour, which we had here. So I went for my walk, and this was about 20 minutes later, and typically if I see we've moved enough in the direction of where I'm looking for, I'll just take it to break even and let it play out from there. But I didn't do that this time. That's why there's a lesson to be learned here. So when I came back and I brought this to break even, at this point in time, I took a look at SPX to see how that was reacting. As we see here, this is SPX on bar replay mode. We actually took my draw on SPX. It was a high quality draw. So at this point, I'm like, wow, we could make a reversal here. And this is where my system's a better trader than me. And I kind of gotten in the way of a good trade today. Because at this point here, I brought my stop to here on this candle close. So I got stopped out here for a 1.2. So I missed out on 0.4R, which is not a big deal, but there was no reason to really do it. You know, as you can see here, like we're in crazy bullish price action. And price went right to my target and beyond. And it's Yeah, it's just if you actually take a look at ES here and NQ, we're now currently at all-time highs. Let's just keep it on the weekly chart. Like this is just crazy price action. It's very rare you see this. Essentially, let me get it up here. Essentially, the big question the market has is how did we react? How were we going to react of this low and this low being taken? That happened right here, and once that happened, we had all this resting liquidity. We had all this resting liquidity to be taken out, and these equal highs up here. At this point now, our next stop will be the 1618 from here, which is 772. Following that, well, the first stop will be, right in around here, and then we're most likely going for 7,500, and we're going to break 8,000. At this rate, we're going to break 8,000. I can't put a timeline on that, but I find it very hard to see a world where we don't hit 7,500 this year. Like we just did, we basically just did that in 2 weeks, and we have we're not even halfway through the year yet. So we'll probably see a reversal here, come back, test support, and then go on up to the 8,000 level. It's a wild call to make now, but you got to remember all of this is happening during extreme uncertainty. When the market gets more certainty, which it's been getting on all fronts, people said AI wasn't going to, AI was a bubble, it's not going to produce revenue. You're seeing almost every single AI platform, like the big boys, like the Anthropics and all the rest of it, their revenues growing at paces the tech sector's never seen. Like it far surpasses anything the dot-com bubble. You're also getting a lot more stability. I think we're getting a lot more stability post Trump China talks. I think the stage has been set. Like, love him or hate him, Trump has done a nice job securing global energy and trade routes, and it puts him in a really strong position going into negotiate with China in the coming weeks. And it looks like China wants a good economic agreement with the US. So if he can pull that off and kind of guarantee stability on the economic front, and then right now all the inflation figures are coming out. It's not the catastrophe that everyone thought it would be with tariffs. Inflation is declining. We're seeing record unemployment at low levels, and we also have a new Fed chair coming in, who's a lot more dovish than Powell, who's leaving. Rates are still relatively high. I think they're in the high fours. People's mortgages people are still paying 6% for mortgages. So once that starts to drop, there's going to be a lot more cash washing around the economy, and that's going to want to find a home. And once that rate drops and bonds aren't paying as high, people are going to look to equities to get their returns. When that delta changes from it makes sense to be in risk-free bonds and equities start outperforming, we're seeing that now. We're seeing a lot of the smaller caps and growth look like they're having bottoming formations. You're seeing it in the Russell 2000. You're starting to see a shift. You're starting to see money come out of the oil and silver trades. That's starting to roll over. All the money that was made there, that's going to want to find a home. All the money that are in treasury is going to want to find a home. And that home is most likely U.S. equities. So yeah, things are looking really strong. This is just the initial stages, and you couldn't find honestly anyone even who's a classic chartist or in the fundamentals who would have thought we would have hit all-time highs this week. No one. Even me, it's shocking. I knew we'd get here. For me, I thought it'd be post China meeting in May. To be doing this before mid-April, it's honestly shocking. But yeah, good talk. I'll recap you if I take any trades towards the rest of the end of the week.